I hope you're having a great day, and I just wanted to welcome you. This is Joe Corio at URL Insurance Group, and we're very pleased to have you on the line with us today. First of all, I'd like to thank all the agents that are online that are producers for URL Insurance Group, whether it's annuities, single premium life, regular life insurance, health insurance, senior products or group products. We definitely appreciate all your business. And we know you have a lot of choices out there when it comes to marketing companies, and we're very happy that you choose URL Insurance Group. For those of you who are new on the webinar today, happy to have you. URL is a full-service broker. We do everything but P&C and securities, and you can check out our website at www.urlinsurancegroup.com. Now, one of the things that we will be covering today is a single premium life, and we're going to get to that program. You know, we do a lot of annuities here as well at URL Insurance Group. Annuities are booming here in 2014. I just read an article where annuity sales industry-wide are up 13% in the first quarter over last year. And I love doing annuities. But the truth is, sometimes there's a need for a product other than an annuity, and they can be served better with a product like a single premium life. So that's what we're really going to focus on today. We've got about a 30-minute presentation. We'll give you some examples of how it works, and we'll have some question and answer period at the end. Now, single premium life has changed dramatically over the years for the better. As folks are learning about the new single premium life, sales have started to soar. And the biggest change is really the living benefits that a lot of these products offer. It is really taking the sales to new heights. Okay. So let's take a little bit of a look at what it is that's making single premium life so popular right now. First, hold on a second. We've got one little problem here with our, there we go. First of all, low rates. What makes single premium popular right now could be the low rates on CDs. It's estimated that there's about $5.9 trillion in bank CDs, money markets, and passbook savings accounts. A lot of that money is just waiting to be transferred to the next generation. And what better way to transfer wealth than life insurance? It always has been and still is the most efficient way to transfer money from one generation to the next. Coupled with today's ridiculously low rates on CDs and money markets, it makes more sense than ever to move bank money into single premium life. We'll give you a couple examples of how that's going to benefit your client in a couple minutes here. The other thing that makes single premium life so popular is the high cost of long-term care. A lot of the new plans of single premium life have benefits for home health care or nursing home care should the client need it. The problem with a traditional long-term care plan is that new plans are very expensive. And there's thousands of old long-term care plans being adjusted due to inaccurate premium assumptions from years ago. So people are starting to shy away from buying new plans, and they're just kind of wondering whether they should keep their old plans because the premiums keep increasing year after year. Not only the high cost of long-term care, but there's also some very restrictive underwriting on the long-term care plans. And this combination is leading to many more single premium life sales. Not only that, long-term care has the old use it or lose it properties that single premium life with living benefits does not have. If the living benefits are not used, the policy still has many valuable features that make it attractive to clients. Another reason single premium life is so popular is the old cash value life plans that are out there, traditional life plans. You know, the ones that were written 20 and 30 years ago. Well, there's hundreds of thousands of them out there, and they have a lot of cash value and very little death benefit. It's not uncommon for us to see an old life plan with about a $50,000 death benefit and 30 to 35,000 of cash value. People kind of wonder, you know, should I keep this life plan? I've been paying on all these years. I really don't need it that much anymore. Well, single premium life is a good way for policy owners to keep some life insurance protection, but they'll have no more premium payments. And finally, the last thing that I'll mention as to why single premium is so popular has to do with taxes. Nobody wants to pay more taxes than they need to. We can use single premium life to transfer taxable money into non-taxable life insurance. Now, we're not talking about avoiding taxes. We're talking about minimizing taxes. And we'll talk a little bit about that towards the end of the presentation. And I also have an example of how that will work. Okay, so now you have a feel for why people are receptive to single premium life. Let's take a few minutes to talk about the product features themselves. Now, we have a variety of single premium life carriers and single premium products, each with their own unique provisions and underwriting. We represent Equitrust, Baltimore Life, Lincoln, Americo, Genworth, National Western, all the top name carriers in the single premium life market. Almost all of them have the same basic key selling points. Single premium life provides an immediate death benefit greater than the premium paid, generally free from income taxes. That has to do with naming an individual as a beneficiary. They all also offer tax-deferred growth. Plans are either whole life with set rates declared annually by the carrier, or universal life, with the most popular UL plans being indexed UL, which allows for greater cash value potential growth. The growth in those plans are usually tied to the performance of the S&P 500. So as the cash values grow, so do the death benefits. And again, the death benefits are usually tax-free if they go to a named beneficiary. One of the biggest selling points, though, on single premium life is a feature that allows the clients to have access to the current death benefit due to chronic illness, which is also called home health care, terminal illness, or nursing home confinement. And a lot of these times on the home health care or nursing home, it's just like a long-term care plan that triggers the benefits. The inability for the client to do 2 of the 6 activities of daily living. So let's take a quick look at the 2 products offered by one of our top carriers, Equitrust. And again, this is by no means the only company we use, but Equitrust does have some very good policies with some unique features that makes it our #1 seller. Now, Equitrust offers both a whole life plan called the Wealth Sure and an indexed universal life plan called the Wealth Max Bonus. First, we'll talk a little bit about the Wealth Sure. Okay, this product is a whole life, like I said. It has a guaranteed death benefit that's always greater than your premium. The guaranteed values are based on 3% interest. The non-guaranteed current values are based on a 4.5% current interest rate. They have living benefits for home health care, long-term care, and terminal illness. And unlike a lot of policies, if an emergency situation comes around, they do have a free withdrawal provision that says after the first year, the client can withdraw 5% of the current accumulated value with no penalty. Kind of like the free withdrawal privilege on an annuity. So it's a nice peace of mind for the client knowing that they do have some access to the funds without having to take a loan or having to surrender it. So now that we know a little bit about the features of it, let's look at the guaranteed benefits for a particular client. In this case, we're using a female 62 who has $50,000. That might be in a CD, it might be in a money market, it might be who knows where, under her pillow. But maybe she's thinking, I'm going to pass this along to my beneficiaries upon my death, my kids or my grandkids. Well, you can see by transferring it into a single premium life, it has a guaranteed death benefit of $95,500. And on the non-guaranteed side, the current death benefit would be $100,237. And you can look, if you're looking here, you can see on the living benefits, the terminal illness benefit would be $90,475. The nursing home care would be $96,250, and that is a 36-month benefit. So you're using all the current death benefit except for $250. And then on the chronic illness or the home health care, the benefit is $1,587, and that's for a 60-month benefit. So her $50,000 has done a lot better than sitting in a CD or a money market, because it's providing benefits for her in the event of unexpected medical problems, or it'll go to a named beneficiary tax-free when she passes on. And again, if she has an emergency, she can borrow from it, or she could surrender it at any time as well. So let's turn the page a little and look at the tabular values on this plan. Hold on a second. Look at that. Okay. And you can see on the tabular values, it's just like any life insurance policy. You have the guaranteed column. In this case, those guarantees are based on the guaranteed interest rate of 3% and the highest cost of insurance that the company could possibly charge. And then on the right-hand side, you have the non-guaranteed. And again, those are based on the current 4.5 and the current insurance charges. And you can see after, year after year, the death benefit does continue to grow. Now again, in the event of unexpected health reasons, the client can access all but $250 of the non-guaranteed death benefit. That's this column here. And if they have an emergency, they can take 5% of the accumulation value each and every year after the first year. And then you can see the surrender value there too. Okay, so you can see how this policy works and how it benefits your client a little bit. Now, I'd like to talk a little bit more about a more popular product, and that is the Wealth Max Bonus. The Wealth Max Bonus is an indexed UL plan. Hold on a second. There we go. It has a guaranteed death benefit greater than the premium. Its guaranteed values are based on a 2% interest rate. It does have non-guaranteed current values, which we'll view in a minute. The beauty of this plan, it provides a 12% instant bonus. So if you're rolling money over, that 12% bonus really helps, and it really jump starts the values. And it has a full return of premium. So, sometimes we hear in the sales world, well, I don't want to be locked into something long term. Well, with this return of premium, you can say to the client, look, if you ever want your money back, the company will return it to you, no questions asked, your premium. Or you can surrender the policy, whichever has a greater value. And in most cases, if you keep it at least a year, you'll probably have a greater surrender value than you will a return of premium. It also provides benefits for home health care, long-term care, and terminal illness, kind of like the Wealth Sure. And it has indexing options to really provide a better return. Cash values are built through linked to the S&P 500. You are not invested directly in the S&P 500. Your returns are linked to the success of the S&P 500, but you do have protection when the market or the S&P 500 declines. Your client won't sustain any losses. They won't take money out of the policy. They just might not add money to the cash value. And similar to the Wealth Max bonus, they have a free 5% withdrawal in the event of emergency. But what really makes this particular product so popular is the 12% instant bonus and the full return of premium. They're great selling points. Now, let's take a quick look at the same example we did on the Wells Shore. We got the 62-year-old female. She puts 50 grand in. Her guaranteed death benefit is $98,000. The current death benefit is $131,287. It's a lot greater because of that 12% bonus. And you can see she can use, on the guaranteed side, $97,750 for the nursing care in the middle, and the same amount for chronic care. That's what the insurance department wants us to use here, the guaranteed rate. But in essence, if this lady really had a problem and needed to tap the policy, she would have access to $131,287 minus $250, because if she exercises it, there's a one-time fee of $250. So she'd have about $131,037 of benefit, either over 36 months for nursing home care or over 60 months for home health care. So the benefits are pretty good. Now let's take a look at the tabular values on this one. Now let's start at the guaranteed column. Again, that reflects the lowest interest rate they can credit, 2%, and the highest cost of insurance, which is unlikely, but it could happen. And you can see the cash surrender value is always the premium paid. And eventually that starts to grow. The guaranteed death benefit of $125,473 in the first year. And people say, well, why does it go down in the second year? Well, what happens on the guaranteed column, eventually, you know, when you're only crediting 2% from day one and charging the highest cost of insurance, you're taking more money out of the policy than you're putting in. But the policy is guaranteed to never have a death benefit of less than $98,000 all the way through. And we're just showing 20 years here, but in essence, this policy is guaranteed to run to the client's age 121. We haven't had anybody hit maturity yet, so we're doing good there. But we're only showing you 20 years, but this policy will be guaranteed with no additional premium to run to age 121. Now on the far right, the non-guaranteed, again, you can see those values. The death benefit grows almost each and every year. It does dip a little, again, for the same reasons. You do have some charges in this policy, and the charges last for 10 years, the surrender charges. So you can see after 10 years, the death benefit really starts to grow steadily. And then the cash surrender value is also grows, and the accumulation value, that's the column the client can take the 5% free withdrawals in the event of emergency. So that's how the policy works. Hopefully you'll have a feel for how the products can help your clients and benefit them. Now what we'd like to do, I'm going to turn the phone over to my associate Maria Adams, and Maria will give you a quick overview of the specs of the policies, including the current rates and the caps. She'll talk about how easy it is to apply for and get underwritten. And then I'll be back to take a few minutes to discuss who the prospects for this type of plan really are. And I think there'll be a few that you probably haven't thought of. But first of all, let's just talk about the underwriting and the product specs a little. Here's Maria Adams, our marketing specialist here at URL.
Hello, everyone. As Joe said, I just wanted to go over briefly the specs on the two products that he was talking about. First of all, the issue ages for the Wealth Max bonus, that's age 50 to 85, and that's the one with the indexed UL and the 12% premium bonus. And then the Wealth Shore, the whole life, that starts at age 55 to 85. The minimum issue premium for both is $10,000, and these are all single premiums. And the maximum premium, or I should say face amount, is $750,000. Again, both of them have a free withdrawal privilege up to 5% of the current accumulation value, and that's starting at year 2. For the interest rates and caps, you can see for the Wealth Shore, the current interest rate there is 4.50, and the minimum is 3%. And then for the Wealth Max Bonus, you can see what those current interest rates and caps are and what those minimums are. And of course, for both policies or products, I should say, the living benefits. So as you can see here too, these caps are higher than the annuities, and that's because there are mortality charges in the policy. So the life companies, they don't have to rely on making a profit on a spread like the annuities do. So that's why you're going to see these interest rates a lot higher. Now on the next screen here, just to show you the statistics on what product is being sold the most, you can see here the Wealth Max Bonus, 77% of sales are for that product because of the 12% bonus that it offers, the full return of premium starting from day 1, and of course more potential growth because it's in with the indexing options. The average size premium you see here is $81,500 for these policies, and that again is a lot higher than some of these annuity sales right now. The gender of sales, females, they love it. 63% of sales are coming from females, and then you see the number there for males. The source of funds where this is coming from are banks, cash with app, savings accounts, and CDs. And then you see the numbers there for the annuities and life. And the average applicant age is 72. And then you can see the age bracket from there on. And how to get started? Really easy. You would complete an application and the disclosure and forms that are required. And while you're with your client, of course, we ask that you initiate the telephone interview between the carrier and the client. And we ask that you do this while you have your client there is because the medical questions that are asked on that application are the same questions that the carrier is going to ask your client. And that information is all fresh in their mind, and it's just easier. And then that way, when you have the application completed and the interview done, you can then go ahead and fax or mail the application to the home office. And what's so nice is after that application is submitted, within 48 hours, you will know if your client's going to be approved or not. The nice thing is there are no pyramids at all that your client needs to take at all whatsoever. It's just the phone interview. If they feel that they need additional information and they have to go for an APS, then the company will go ahead and get that done. And the other thing to note is that with the underwriting, they are very liberal. They know that these clients at that age, in their 60s and 70s, they're going to probably have some health issues, high blood pressure, cholesterol, or diabetes. And as long as everything's under control and the client doesn't have any, serious issues, these policies do get issued very quickly. So it's a great product. Of course, you do need to get appointed prior to submitting the application. So now I'm going to hand it over to Joe so he can talk to you about who the prospects are for these plans.
Okay, thank you, Maria. All right. Let's talk about not only prospects but uses for this type of plan, where we're seeing it the most. We already mentioned in the beginning of the presentation that there's trillions of dollars sitting in banks. A large portion of that is sitting in accounts earning less than 1%, waiting to be transferred to beneficiaries. These are great prospects for single premium life. There's just no two ways about it. Who wouldn't want to immediately increase their beneficiaries' inheritance by 30, 40 or 50% or more into a tax-free death benefit and still have full use of the money for themselves if the need arises. So this product is awesome for that. And you'll see, or you did see on the statistics that Maria showed up, a lot of them is cash with app. People are cashing in their CDs and taking this policy. Also, we mentioned the high cost of long-term care. Many folks not only don't like the high cost, but they don't like the use it or lose it benefit that comes with it. Single premium does not have that. If you don't use the living benefits, it'll go to a named beneficiary in the form of life insurance. Also, maybe some folks have been declined for long-term care and they don't qualify. Well, single premium life is primarily a life policy, so it is underwritten much differently than long-term care. Single premium life plans are underwritten for mortality. So we have a lot of instances where people were declined for long-term care. They apply for the single premium life and it gets issued right away. You know, they're not concerned with the hip replacement or something like that, like a long-term care plan would be. They're worried about cancer or stroke or heart attack, but most of the clients with the issue age of 72 either have some elevated blood pressure, some elevated cholesterol, sometimes even diabetes, and we're getting them issued in 48 hours. But the other thing with the long-term care aspect, a lot of folks are getting renewal notices saying that their premiums are going up, and your client has a dilemma. Do I drop the coverage after all these years? I still want it, but man, the cost is getting so high. So maybe they have some CD money they can put into a plan like this to provide some kind of living benefits. And then what they can do with their long-term care policy is maybe they can take and change the waiting period. Maybe they go from 30 or 60 days and make it a 6-month or a 1-year waiting period. That's going to drop the premium for their long-term care plan dramatically so that they can still keep that, but now they would have something immediately. Because in a lot of states, like Pennsylvania, the benefits for home health care and nursing home care are available immediately. There's no waiting period. Some states do have like a 30 or a 90-day waiting period, but Pennsylvania and a lot of others do not. So that's a good way to complement a current long-term care plan. Let's see, where else are we talking about? Oh, okay. How about the existing life clients that have old life plans that are ready to implode, or the ones that never add premium to them? And if you've been in the life business for a while, you get these annual statements each year that shows, you know, the cash value accumulation, and you can see where it was last year and where it is this year. And at some point, and you could also see how much premium the client's paying. And you'll notice when you go through there, sometimes on the old UL plans, clients are not paying the premium. So eventually their cash value starts to go downhill, and that thing is just going to implode sooner or later. So it's a perfect opportunity to pick up the phone, get the appointment with the client, and say, look, I noticed you're not putting money into your UL. What's up? And they'll probably say, well, I don't think I really need it. I'm just letting it go. Well, rather than let it go, suggest they roll the money into a single premium life. It's still going to provide some kind of death benefit, and it's going to provide the living benefits that they probably don't have any longer, and they're not going to have to pay any more premium. So that makes a great sale as well. The last thing I want to discuss is the annuity clients. I mentioned taking taxable annuity money and moving it into a tax-free. Now, you can't do a transfer from an annuity to a life insurance policy. You can go from life to annuity, but you can't do the other way. So a client would actually have to surrender their annuity and move the money over. But don't, you know, we used to run when we heard that, because we didn't want any part of it. But if you do it right, and in certain instances, it does make sense. So let's take a quick look at an example here. Here's a client, 65-year-old non-smoker, had $100,000 in an annuity. Maybe you wrote it a couple years ago, and it's growing and growing. Now it's worth $130,000. So the gain in this non-qualified annuity is $30,000. If the client was in the 30% tax bracket, that would cause a $9,000 tax problem. So that would have to be overcome. But if they surrendered their policy for $130,000, took $9,000 out for taxes, that still leaves them with $121,000. If they were to put that into the Wealth Max bonus, you can see it would provide a death benefit of over $220,000. Okay, so you already went from $130,000 of benefit that's going to be partially taxable to $220,000 of non-taxable. But what the really important thing is, this client's only 65. So chances are, statistically, she's probably going to live another 20 years. So over 20 years, this single premium life plan is going to grow and grow and accumulate. And eventually, when she dies, it'll go to her beneficiaries tax-free. If it stays in the annuity for the next 20 years, it's going to grow and grow also. But what you're doing is providing a bigger tax burden for the beneficiaries. Because in this instance right here, if she died, she'd have a $30,000 taxable event to her beneficiaries. Over the next 20 years, if that thing grows, who knows? They might have a $130,000 taxable event. So the right person at the right time, done the right way, it's a good vehicle to move some taxable things over to a tax-free plan. So I hope you got a pretty good idea of what we are doing in the single premium market. Again, this is by no means a long-term care plan. It is a life policy with a rider that allows you to use the death benefit for unforeseen medical purposes. If you want a long-term care product for your client, we have other outlets, but this is definitely a great alternative. Now, we do have a question and answer box there. If you have any questions, we'd be glad to go over them with you. I think we do have some. But also, we're going to put up a poll question. My associate, Jim McDaniel, is going to put up a poll question, and it's very simple. It's going to say, if you want us to contact you, then we will do that. And if you don't want us to contact you about single premium life, we won't do that, because we know your time is valuable and our time is valuable. And we don't want to, there's a fine line between being persistent and being a pest. We don't want to be a pest, but we want to assist you if you want help, or if you want to learn more about this product, or see how you can get started, or if you want a specific proposal for a client that you might have in mind. So when we put up the poll question, just take a minute to answer it. If you want us to contact you but for more information or answer any questions, we will be glad to do that. If you don't want to, that's fine too. We won't be offended. You know where to reach us. Our information is on the screen there. You can contact myself or Maria for a personalized proposal, and we'll be glad to help you not only in your single premium life needs, but also your annuity needs. Okay, I guess we did a good job because I don't see any questions. So we're going to close it out today. I want to thank everybody for their time. We're about 3 or 4 minutes over, but we apologize for that. So thank you for taking the time to join us, and happy selling. Have a great day, everyone.